Antes de darmos início ao evento, gostaríamos de reforçar o seguinte disclaimer. As manifestações expressas por integrantes dos quadros da Fundação Getúlio Vargas e por convidados que participam dos eventos e transmissões online representam exclusivamente as opiniões dos seus autores e não refletem, necessariamente, a posição institucional da FGV. Após este vídeo de aviso, solicitamos a autorização para o uso da imagem e da voz dos palestrantes mediante manifestações de concordância, tais como um aceno de cabeça ou outro gesto de aprovação. Agradecemos sua participação e desejamos um excelente evento.
Hello, good morning to everyone, or good afternoon, or good evening, depending where you are watching from this webinar. My name is Luca Belli. I'm professor here at FGV Law School, where I direct the Center for Technology and Society at FGV. And together with my colleague, Hannah Draper, who leads digital public infrastructures here at CTS, I will be the co-moderator of this webinar on digital public infrastructure for payments, digital sovereignty, interoperability, and consumer protection. Together with us today, we have the great pleasure and honor to have a set of highly distinguished speakers, starting with Chairman Ajay Kumar Choudhary, from the National Payment Corporation of India, where he is non-executive chairman and also independent director. Chairman Ajay will have to leave us after more or less 1 hour since the start. So for the last part of the webinar, he will be kindly substituted by Mr. Rajesh Sakpal, who is Group Strategy Head within the CEO Office of the National Payment Corporation of India. He will be followed by Amrita Singupta, who is our research fellow here within the CyberBricks program of CTS. Then we will have Breno Lobo, who is the head of the Pix system management division at the Brazilian Central Bank, where he acts also as a deputy head of the Department for Competition and Market Financial Structure. We will have also the pleasure to have Dr. Larissa Magalhães, who is professor at Nova School of Business and Economics, and also our CyberBricks fellow here at CTS FGV. And last, but of course not least, Hannah Shared, who is creative director at the Interledger Foundation. Before we start, I would ask to all our panelists to express their consent to be recorded in this way, if they can. Fantastic. And then also a little bit of housekeeping, just to share the information with everyone who is participating and attending online, that they can actually ask questions using the Slido link that is in the description of this webinar. So you can use the app Slido to ask questions, and they will be then asked the panelists in the last segment for the open debate. Now, before we start, just a little bit of introduction about why we are doing this webinar today and what is the meaning of this webinar for us. So those of you who have been following the work of CTS and especially the CyberBricks program, you might know very well that we have been dealing with DPIs for some years now, especially in the context of digital transformation strategies of the BRICS countries, especially India, who is the world leader of DPIs. But also, we have been exploring increasingly digital public infrastructure for payments, or DPI4P, as we call it in our new research project that we are starting in partnership with the Interledger Foundation. You will understand in a few minutes why Interledger is such a relevant partner for us in this specific project. And we are starting now within the context of the CyberBricks program to map DPI for payments in India and in Brazil, and then with the ideal to scale this mapping up to the entire BRICS grouping, so the 11 members that now compose the BRICS. Why this is particularly relevant now, and why you might wonder, we stress digital sovereignty as the first element of our analysis, together with interoperability, consumer protection, and data governance, which are the main dimension of our analysis. We have been defining over the past 7 years of research on digital sovereignty here at CTS, digital sovereignty as the capacity to understand, develop, and regulate effectively digital technologies in order to achieve self-determination, autonomy, and control over digital assets, right? So in a paper 3 years ago, actually, when India was as the presidency of the G20, I stressed that DPIs, especially in Brazil and in India with regard to DPIs for payments, are a very good example of good digital sovereignty. So the use of technology to empower people, to foster competition, to foster innovation, and to reduce dependence. And this Pix system and UPI that are the special object of analysis today in this webinar are particularly telling in this regard, because they reduce the dependence on foreign systems like Visa and MasterCard, which previously were literally the only way Indians or Brazilians had to pay online 24/7. They lower enormously or even eliminate transaction fees. And very few people understand that in the global majority, each transaction fee costs 3 to 5% of the total cost of the transaction. And this has been totally disrupted by the creation of DPIs. And then a point that I always stress, especially in my research on data sovereignty, DPIs for payments, they disrupt the concentration of data in foreign intermediaries. So people frequently do not realize that companies like Visa or MasterCard, they do not earn their profits, especially from the 3 or 5% they charge. They earn their profit from the collection and processing of data. They are big data companies, they are AI companies. So by creating DPIs, this redistributes the capacity to control, to process, to innovate, and to compete using payment data in local intermediaries and even public institutions. So that is an extraordinary asset of DPIs, and not to mention the fact that in times of highly volatile geopolitical events, being autonomous and having an insurance against being your economy being disrupted by the weaponization of foreign tools is always a good asset for a government and for a nation. Now, without further ado, let me just pass the floor to my colleague Hannah Draper to have a little bit of introduction also on the consumer perspective of our webinar of today.
Thanks so much, Luca, and thanks to everyone who's joining us today. As Luca mentioned, this webinar is part of a broader research project led by CTS FGV and funded by the Interledger Foundation. The project examines payment DPI in BRICS Plus countries through the lens of digital sovereignty, interoperability, financial inclusion, and consumer protection. And one of the reasons why this work is so important at this point in time is because we find ourselves at a critical moment in the evolution of payment infrastructure. Across the world, countries, especially from the global majority, are rapidly implementing digital payment systems, and the governance decisions being made about them will shape financial participation for billions for decades to come. Importantly, many of these systems are still in relatively formative stages, which means we still have a window to shape governance frameworks before policy design and implementation decisions become entrenched. The examples of Brazil and India are therefore especially important. Pix and UPI already operate at enormous scale and are increasingly influential in international conversations around digital finance, including around digital sovereignty, financial inclusion, consumer protection, and interoperability, the topics of our webinar today and our overarching project. More broadly, BRICS Plus countries make up more than half of the world's population, meaning that these governance models have a profound impact not only domestically on an enormous number of consumers, but also in influencing emerging models of digital payments as more and more countries explore alternatives for cross-border payments and new forms of financial cooperation. One of the central premises of our project is that payment systems are not neutral technical infrastructure. They increasingly mediate access to economic participation, public services, and everyday life. In other words, infrastructure design increasingly shapes who can participate economically, under what conditions, and with what forms of protection against risk. For these reasons, questions about the governance, design, and implementation of payment DPI are also questions of rights, public interest, and consumer protection. A great deal of discussion around payment DPI has quite understandably focused on innovation, efficiency, adoption, and scale, all of which are genuinely significant developments for extending financial inclusion. But our project asks another question. What do these systems look like from the perspective of the consumer? For example, are emerging payment systems genuinely inclusive, or are some groups still being left behind due to connectivity gaps, digital literacy barriers, or accessibility challenges? Who bears responsibility when fraud occurs? What kinds of redress mechanisms exist for consumers? And how can interoperability be enabled without undermining digital sovereignty and accountability? One important consideration emerging from our work is that scale alone is not sufficient. A system can achieve massive adoption while still raising important questions around consumer protection, cybersecurity, accessibility, redress mechanisms, and data governance. At the end of the day, access must be meaningful to users, and achieving widespread scale is not the same thing as a successful consumer-centric system. This matters because we are seeing challenges emerge in payment systems, for example, in relation to fraud, inclusion, and cybersecurity. So from this perspective, consumer trust itself can be considered an integral component of successful digital public infrastructure. This is also why the project takes a comparative and evidence-based approach. By examining systems like Pix and UPI, including their governance structures, institutional arrangements, technical architectures, and approaches to consumer protection, we hope to better understand not only what has worked, but also where consumer protection gaps and governance challenges remain. Today's discussion is therefore an opportunity not only to discuss emerging findings of our project, but also to think collectively about how payment DPI can evolve in ways that are interoperable, inclusive, digitally sovereign, and genuinely centered on the needs of users. So thank you again for joining us today. And with that, I'm looking forward to kicking off the discussion. I'll hand it back to Luca to start us off.
Fantastic. Thank you very much, Hannah, for setting the scene. And so let's start to dive into our discussion with our first speaker, Chairman Ajay. Thank you very much for being with us, Chairman Ajay. So for those of the attendants that are not very familiar with UPI, could you just explain a little bit how UPI operates in terms of technical protocols, and also in terms of governance, and also to understand the magnitude of the success of UPI, and we will then deal with Pix. What are some recent figures about the adoption and the transactions that UPI facilitates?
Thank you, Lucas. I'd like to start by conveying my sincere thanks to FGB Law School, Mr. Luca Belli, Amas, and Madam Amrita Sen Gupta, and all others who are organizing this event for extending this invitation. It is a privilege to contribute to this important dialogue and webinar on DPI for payments, and I look forward to a rich and insightful discussion. I'm thankful to Luca, particularly the context what we have set in. It is very correct context, and the way you have looked at the geopolitical issues, they are very much relevant and sometimes concerning also. Just for an introduction, I'll give you 5 minutes oversight actually on how we look at UPI and broad technical protocol, as well as the scale, etc. what you asked. Unified Payments Interface, what we call UPI, represents one of the world's most significant digital public infrastructure, that is DPI initiatives, combining interoperability, inclusion, innovation, and trust through an open and secure payments architecture. Built within India's broader digital ecosystem of identity, banking, and mobile connectivity, UPI enables seamless real-time money movement across banks, applications, merchants, and users at population scale. Now, looking at the technical protocol, for a technical perspective, UPI operates as a real-time interoperable payment protocol developed by National Payments Corporation of India under RBI, that is Reserve Bank of India, our regulator, oversight. Its architecture enables instant bank-to-bank fund transfer through standardized APIs connecting banks, fintech firms, merchants, and third-party applications. Today, the ecosystem supports over 100 banks and non-bank UPI apps, reflecting its openness and scalability. A defining characteristics of UPI, if you look at, is the interoperability which is embedded in the protocol itself, enabling users and merchants across applications to transact seamlessly through shared technical standards. UPI has evolved through continuous co-creation with banks, fintech firms, merchants, and tech participants, and is supported by robust open source technology and an active architecture for high availability and resilience. Built on virtual payment addresses, interoperable QR code, secure authentication, and RBI-aligned two-factor authentication, UPI operates in real time on a 24/7 basis. It now supports merchant payments, mandates, transit payments, IPO subscription, and credit on UPI with architecture designed for massive transaction scale. The platform, for your information, processes nearly 15 billion API calls daily and is architected for transaction volume of up to 10 billion transactions a day, generating significant economic impact through lower transaction frictions and wider digital participation. The architecture continues to evolve with emerging use cases. Recent innovations showcased at our Global FinTech Festival at Mumbai included UPI Reserve Pay, UPI for IoT devices, UPI in case of multi-signatory accounts, and UPI Help for customer assistance and dispute resolution. Now, looking at the governance model which is underpinning UPI is central to its success. NPCI operates as a collaborative institution promoted by banks and regulated entities, while the Reserve Bank of India is the market regulator. This structure enables market-led innovation while ensuring governance and systemic trust remain institutionally anchored. The framework brings together banks, 90 plus payment service providers, 40 plus fintech firms, 65 plus million merchants, and regulators and technological participants under common standards for security, compliance, settlements, and resilience. Consumer protection remain integral through KYC norms, authentication safeguards, and grievance redressal mechanisms. The governance structure is further strengthened through a steering committee comprising banks, fintech firms, and industry body. Now, looking at the magnitude and scale of UPI, the scale achieved by UPI is unprecedented in global retail payments. In financial year 2025-26, our financial year is April to March, UPI processed 241 billion transactions, reflecting 30% year-on-year growth, with transaction volume reaching around USD 3.5 trillion. UPI now accounts for over 80% of India's retail digital payment volumes, serving 500 plus million users, 65 plus million merchants, and 700 plus banks. India contributes nearly half of global real-time payment transactions, with UPI processing over 22 billion transactions in April 2026 itself. These figures demonstrate that interoperable, low-cost public digital infra can achieve inclusive mass adoption on a population scale. Now, I'll touch upon a little bit on the UPI's broader global relevance before I conclude on this question. UPI relevance now extends beyond India. Through partnership with countries including Singapore, UAE, Mauritius, Bhutan, Nepal, Sri Lanka, France, India is increasingly contributing tech solutions and governance learning for interoperable sovereign payment system. Further, NIPL, that is subsidiary of NPCI for international expansion, has signed MOU with few African countries also, including Trinidad, Tobago, Peru, Namibia, for UPI deployment. These arrangements basically for both creating the infra as well as for interoperable payment system. These partnerships are based on the principle of global digital public good, What we mean by global digital public good, that we provide all this infra support or interoperable platform without compromising the sovereignty of the jurisdiction. UPI also demonstrates that digital sovereignty, interoperability, innovation, and consumer protection are not competing objectives. With the right institutional design, they can reinforce one another to create inclusive, resilient, trusted, and globally scalable payment system. Just one liner before I conclude, that possibly if you look at the future, possibly next 4 to 5 years, we have to rethink the entire payment structure in a way that many of the or most of the financial assets will be tokenized. Possibly some of the real estate assets also will be tokenized, and we'll have to use the payment system basically by using some central digital currency, etc. also, and we have to be as effective as we are today. Look forward for further discussion. Over to you, Lucas. Thank you.
Thank you so much, Ajay, for your comments, and looking forward to discussing further later in our conversation. The next question we have is for Amrita. Amrita, could you tell us, based on the early findings of our research, to what extent has UPI been instrumental for financial inclusion, and what could have been done differently in terms of data governance?
Thanks so much, Hannah, and thanks again for having me here today. I want to start with anchoring financial inclusion, because Mr. Chairman has actually mentioned a lot of the percentages, etc., numbers that I had. But let me start with sort of what financial inclusion is. And, there are different definitions, but financial inclusion essentially ensures free access to and use of appropriate financial services for all people and businesses at an affordable cost. And by providing formal access to banking and financial payment systems, financial inclusion entrusts individuals and small businesses to be a part of the circular flow in an economy. Essentially, this participation leads to increased potentially savings, investment, and consumption, which drive economic activities and growth. And it also enhances economic resilience by allowing people to manage risks, absorb financial shocks, and so on. So I wanted to engrave our discussion, embed our discussion in this, because the UPI conversation is very relevant to how it enables some of these things that we mentioned. So over the last decade, just to talk a little bit more about UPI, in the broader Digital India ecosystem, India has been actively promoting the use of digital technologies in various sectors, healthcare, education, agriculture, and so on, under the Digital India program. And Digital India is essentially a campaign through which the government of India seeks to transform India through a digitally empowered society and knowledge economy, through digital delivery of services and expanding the digital economy. So some of the key factors that actually contributed to the growth of the digital financial ecosystem over the last years include, of course, the growth in internet and mobile banking, digital wallets, development of the AEPS systems, the Aadhaar-enabled payment systems, advent of the United Payments Interface, and that has sort of driven this innovation ecosystem. Of course, 2016 is when UPI was formed, and there has been a lot of uptick, especially during the pandemic years, in its use. The aspect of UPI that made it unique and appealing was also that it was a multi-application system, as Mr. Chairman also mentioned, which means that users on any UPI platform could make transactions to any other account registered with UPI, irrespective of the app or bank of the counterparty. Thus, users were essentially not restricted to use a particular bank app. And just to add a little bit more around the percentages, I think the preceding factor to UPI usage is also bank account ownership, and bank account ownership in India rose significantly to about 89% by 2024, driven by the Jan Dhan Aadhaar Mobile Trinity program that was called, with UPI providing the transactional utility that gave people a reason to some extent to activate accounts. And of course, there has been some gendered aspects to this as well, where we have seen that, women's financial inclusion or engagement within, this transactional ecosystem increased, with 55% of Jan Dhan accounts being held by women. So those are also, sort of certain aspects of different demographics that have stood to have greater participation in the formalized economy through this payment system. Also, to point that around 70% of UPI users also come from tier 2 cities and below, with over 80% of newly registered users originating outside tier 1 cities. So which essentially points to a lot of sort of use across, not concentrated in cities in itself. And there's another research that pointed to UPI becoming a powerful means for deepening financial inclusion in India by essentially providing a simple, secure, and accessible platform for payment transactions. And of course, one of the key benefits is its capacity to facilitate instant and seamless transactions without requiring a traditional bank branch visit, thereby, in some cases, lowering barriers to access financial services for previously underserved populations. And this convenience is especially useful for people who have limited or no access to banking and financial facilities, especially. We had also done a research last year on the digitalization of finance, where we also looked at some of the successes of UPI, and the other bits were also around smaller merchants and government impetus, that there has been a concerted effort by the UPI member banks to onboard small vendors and merchants by charging the same fees for such transactions as regular P2P transactions. And there has been an ease of development of third-party applications where UPI's open infrastructure architecture allowed third parties to easily develop their own apps, giving consumers greater choice. Of course, there is a bit about the monopoly that exists on the platform that I will come to when I talk about some of the concerns. And of course, the ease of use is something that we've spoken about. Now, coming back to, what are certain concerns that have also come up with UPI, specifically when we look at data governance and then some other bits, I want to focus on 2 or 3 things. First is, of course, that, UPI is a very data intensive system. And RBI had in 2018 directed all payment firms to store all data pertaining to payment systems locally. And of course, now we also have the Data Protection Act, which has come in, but there has been a lag from when the UPI system has started and when we finally had a Data Protection Act. So understandably that there will be some lags in the data governance frameworks, although RBI has been putting out various circulars. There's also been a particular concern around consent gap, where incidents have already occurred where payment service providers ported users' UPI IDs to different banks without obtaining their consent, with users describing this as an invasion of privacy, where actually there was an NPI circular finally in March 2025, which said that UPI apps shall obtain explicit user consent with clear opt-out options for seeding or porting UPI numbers. So there are, of course, certain measures that are being taken for some of these concerns that are coming up. And lastly, there has been a huge amount of concern around the frauds and scams, and I'll talk more about that in my next segment. But I just want to focus very briefly on the question of business model sustainability and the MDR question, which is the merchant discount rate. Merchant discount rate is essentially a small fee expressed as a percentage of the transaction value that merchants pay to banks and payment processors for accepting digital payments. Now, we know that it has been essentially, UPI has been a public infrastructure which serves certain public utility. So there have been a lot of discussions around whether there should be a percentage fee that should be applied, or this MDR rate, or whether what are the pros and cons. So just very briefly, I think one of the things that has come up is that given that it is essentially free, that it has led to some market concentration with 2 primary players controlling 83% of the UPI transaction volume, given that they've had first mover advantage. And now that they're very big in the sort of ecosystem, that smaller players are not able to make an entry. And of course, there are arguments also, again, around whether or not one should make that payment, and whether there should be a tiered approach where larger merchants are charged a fee as opposed to smaller merchants. But I understand that there's also some thinking that once there has been something that has been made free and has been articulated as a public infrastructure and a public utility product, that then making changes to that system may have some challenges. So I think that has been a pretty, widely debated question around how do you sustain the UPI model in the future? What are the sort of business models, if at all, that need to be thought about? Are there certain incentive structures that need to be thought about, which can then allow greater sustainability? Because this also goes back to sort of greater investments in thinking about cybersecurity and frauds, and sort of further strengthening the infrastructure to reduce some of those leakages that may happen. I'll pause there.
Fantastic.
And I,
Oh, sorry. Can you want to...
Luca, if you permit me for a minute.
Yes, sure.
Oh, great. I must compliment Amrita actually for defining correctly the inclusion in Indian context, because it's again a journey. Because when you bring people from informal to formal sector, that is the first level of inclusion, and then next level is basically access and better access. There basically UPI plays a role. So that is the way we look at it, and my compliment to her. Obviously on the data side, I must assure, obviously Rajesh will answer briefly afterwards, actually all details when questions will be there. We are looking at it very, very in a clear term that we meet all the compliance requirement as a fiduciary, not the operator. So that is the way we look at it. And that's why there's a difference between this requirement for both that we are taking care of. On concentration side, briefly, I'll touch upon that we have our own app. We are now, that is called Bheem app. And this basically, last 1 year, we are giving a special thrust on that. It has increased from 0.19% of the UPI volume to now 1% plus UPI volume. And we are expecting that next 2 years, it will be 5%. And there possibly will be able to address in case of any strategic concerns arise in future. So that is another aspect, possibly what Luca was also mentioning. On MDR side, definitely is an issue. However, we are trying to just look at how to meet the competing requirements. So those are the things actually we have to look at it, and accordingly we are working on it. But I don't think there's a concern on investments on the security and other aspects if MDR is not there, or MDR is partly compensated by government fiscal support. Over to you, Luca. Thank you.
Thank you very much for these further elements. And as you may understand, these issues are quite complex and multidimensional, and this is precisely why we are dedicating a full stream of our research to explore them on top of all the research that we have developed over the past 3 or 4 years at least dedicated to DPI, which actually is all in open access on our website, of the website of the CyberBRICS program, cyberbrics.info. Now, let's change our geographical focus and let's move to Brazil, which also has been extremely successful in implementing its own DPI for payment, Pix, that also is studying a central bank digital currency, actually is already piloting it, the DREX system, together with India, with the e-rupee. But again, it is interesting for us to start to have an understanding of how this works. So it's very good to have Baino Lobo with us today. He has been leading efforts at the Brazilian Central Bank organizing Pix, which is already almost 6 years old in its implementation, plus several years of conception and development. So it's already a quite sophisticated and mature, very mature, I would say, system. So Breno, could you tell us a little bit, could you explain us how in technical terms and in governance terms the PIX system works? And also, again, I would ask you if you can share some figures on for the audience to understand the magnitude of the system in Brazil. Thank you very much.
Hi, Luca. Hi, everyone. Thank you very much for the invitation. I will start with the technical protocols. When we are discussing the design of the PIX ecosystem, we try to build it upon international standards. So we had this long-term view of integrating PIX with other national fast payment systems in the future. So we would have to internalize these international standards. So, for example, it's a very traditional technology of communication between the Central Bank of Brazil, that is the operator of the system, with all the payment service providers that access directly or indirectly our systems. We use the ISO 20022 standard for messaging communication. Messaging communication, it's the standard way of technology to enable the communication between all the participants of a payment system, and we decided to adopt the ISO 20022 standard for that. Pix transactions, they rely on alias in order to facilitate the initiation of a transaction. And also on QR codes. And for QR codes as well, we adopted an international standard. We used the EMV standard, that is the standard used for credit cards and debit cards. So why not use something that all the financial institutions already were familiar with here in Brazil? So we decided to adopt this standard as well. And for other systems, we decided to use open source APIs. So we publish all of our APIs, all the technical standards. So it's possible to replicate everything that we do in whatever system on other countries if they want. So for Dicty, that's one of our systems that we also operate. That is our centralized proxy directory, where we store all the data associated with the alias, and it also serves as a centralized anti-fraud database that we store information and share with all the participants as well. We use open source APIs in order to communicate with all Pix participants. So to get all the information regarding fraud, to get the registration of the alias, to exclude alias, to change information associated with alias, portability of alias between different payment service providers. And we also developed a standardized connection protocol between merchants in their own PSPs that we call the Pix API. That's something that we did in order to facilitate adoption and generation of QR codes by merchants, and also to identify that the funds were credited instantly, so they can have a smooth checkout process when they sell goods and services using Pix. And these Pix APIs, they are integrated at the POS terminals that also allows for credit cards and debit cards transactions, ERPs, and any electronic funds transferred at point of sale. So we were worried about fostering adoption of merchants, and that standardization was key in order to facilitate this kind of adoption. Turning to governance, as already said, the Central Bank of Brazil owns the rule book, so we define all the set of rules and operational procedures upon Pix. We also developed and operate the payment system itself that settles the Pix transactions, and also Dicty, as I already told you, that is our proxy directory database. But we have on our site a permanent advisory committee whose purpose is to provide inputs to us in defining all the rules and procedures governing the operation of Pix, that we call the Pix Forum. So although at the end of the day, the decision is ours, we decide every little aspect of Pix with the help of any stakeholder interested in contributing to the building of the ecosystem. So nowadays we have more than 300 participants on Pix Forum. It's coordinated by the Central Bank of Brazil, but we have Pix participants, we have associations of fintechs and banks, big banks, medium-sized banks. We have law firms, we have consultants firms, we have the academic community, we have non-profits such as churches, for example. We have technology service providers, we have security service providers, we have government agents. The National Treasurer is on Pix Forum. we have the tax authority, we have the federal policy as well, and end users. We have merchants associations and we have consumers associations. So we have to manage all these different interests, listen to them, build a framework, build a place where we can hear anyone interested in building the ecosystem, process all the contributions, process all the suggestions that we get, and then define the rules governing Pix. This Pix forum works through working groups. Sometimes we send them drafts and we collect suggestions and critiques in order to define the rules. Sometimes we ask these groups or subgroups to send drafts to us. So we define the agenda and then we assess the suggestions that we get, and then we define a new product, a new feature, an improvement on a security mechanism, for example. So it's a place where we really dialogue with the stakeholders in order to build our ecosystem. Turning to some figures in order to understand how big Pix became and how important and systemically important, I would say, to our retail payments market. Some figures from 2025. We processed almost 80 billion transactions. It was a growth of 25% compared to 2024. It represents 374 transactions per capita. Every Brazilian made 374 transactions via Pix on 2025. We representing more than $6 trillion. That is almost 3 times the Brazilian GDP on 2025. We had on last April 2026, 142 million Brazilians initiating at least one Pix transaction. So we have almost 93% of the Brazilian adult population initiating a Pix transaction each month. That's really huge. When you turn to unique firms and merchants, users on April, we had 12 million merchants or business firms accepting Pix transactions. We had some effects over the use of cash. We have a strong reduce of cash. We have evidence from payment journals and the decrease of cash withdrawals in Brazil. So we contributed to the digitalization of the retail payments market, and we also contributed to financial inclusion. Nowadays in Brazil, 96.4% of Brazilians had accounts, banking accounts or payment accounts on payment fintechs. This number was 77.3% in 2019. So it's a very huge increase in 5 years. This data is from 2024. And when we turn it to the low level, the lowest income share of the population, we have data of 74% of the population that receives social benefits, they use Pix. So Pix is not something that only highly educated and with a high level of income use. It's a system that is meant easy to use for every Brazilian, including the lowest income share of the population. So I'll stay here now and I'll be here for the next questions.
Bruno, thank you so much for your comments to help us understand the significance of Pix. Staying with the Brazil focus, our next question is for Larissa. Larissa, can you tell us to what extent has Pix been instrumental for financial inclusion and what could have been done differently in terms of cybersecurity? Perhaps picking up from some of Bruno's comments. Thank you.
Yes, thank you, Hannah. I'm happy to be here. Thank you for the invitation. Yeah, let me just add some comments in terms of inclusion. First, among the comments that Bruno have already explained it very well. To say that you also have the strategy, Brazil National Strategy for Financial Inclusion, which reinforce some policies in terms of vulnerable groups, in terms of our digital financing. In terms of central bank, It's also important thinking long term because central bank they have a strategic agenda that we call BC hashtag that have been increasing some kind of citizenship financial approach in terms of increased transparency, participation, accountability, competitivity. That's why we are not surprised to see how Pix are creating their protocols by some forums, by some knowledge infrastructure. So just so you see how big is this kind of work in terms of in favor of financial inclusion. But now, jumping deeper in terms of the perspective of the governance of DPIs and how you can analyze this in terms of the user's need and the connectivity public policies, because this is very important in Brazil. We should understand that central bank has been guaranteed the same regulatory treatments for traditional and big banks, but also for fintechs. In terms of this, the main results is they eliminated the both costs, but also diminish the kind of barriers in terms of access. The result is for individuals such as us, it's a zero fee in terms of use Pix. But otherwise, you also have some kind of cost in terms of access this. I will try mention in two terms. First, in terms of digital literacy. And secondly, I will not say that's a problem, but it's an opportunity to build some kind of best practice for UX design decisions for apps. Because what you should understand in terms of Pix and the connectivity, for example, is we still very dependent in terms of the apps. And even you have developed different types of approach for Pix working in different stable connection in some rural areas in Brazil, for instance, and merchants and etc. And when you're looking for all the rail that you have in the Pix, in any time or in some time, you need to have this kind of connection to finalize the entire payments, which means is we still have a lack in terms of some recommendations or public policies aligning financial inclusion, DPIs, and connectivity, which is very significant. When you're looking for the numbers, the difference between the south and the north is high. So this is may impact, and they should be considered this for the next governance or public policy approach, that kind of opportunity. And finally, to come back in terms of the design of the apps, one point that Brandon mentioned is the profile of the people used to use the Pix. And from this side, digital literacy is very important. Consider that as much they use Pix and they also might use open finance, which is more complex than Pix. They have consent data and etc. So should be interesting establish some kind of recommendations for the banks to build these apps based on the user needs or define some profiles or something else to make clear then that they trust in the app, but they also can use this in a friendly and confidential way. So that's why I want to highlight it, because in the end, what you can see for Brazil, how it's important to understand that DPIs should be very aligned with our public policy, such as connectivity, but also our recommendation in terms of the monetary policies. My final comment on it is, Brian also mentioned how is important the forum of Pix and the central bank as a regulator and operator. But you also have our Council for Monetary Policies that decide together, oversee some kind of policies, for example, cybersecurity. And this is the only concern that I used to say that I should do this different than before, because doing the scalability of Pix and the high number of the users that you have right now, only in the last year, in December the last year, that you are increasing some rules in terms of the frauds and incidents that Brandon mentioned very well. But I'm asking that it's opportunity again to prepare this in non-reactive way, other than building something more proactivity and connected with digital literacy and some preparation in terms of how the users you deal with some cybersecurity risks or something like that. So thank you so much, Rana. Looking forward to have more questions.
Fantastic. Thank you very much, Larissa. And I think that the people that are attending this webinar online are already understanding very well the complexity of these tools in these systems. Another element of complexity is how to make them interoperable, right? And we have discussed, I think, in a very sophisticated way how this UPI and Pix as digital public infrastructure aim at making interoperable the financial system within the country and ideally also with other systems. But so let's now try to delve a little bit on which kind of solutions exist to do this. And that is why I think it's very relevant to have together with us today Hannah Shred. She is creative director at the Interledger Foundation, which is our partner in this journey in exploring DPI for peace. So the Interledger Protocol that is housed and promoted by the Interledger Foundation aims precisely at providing global interoperability of national or even business efforts to create financial inclusion and create new financial system and new DPIs. So could you give us a little bit of overview of how the Interledger Protocol works? Because I believe that many people that are watching us today may not know how this works. And also a very interesting part that I think is very much underexplored about the work you are doing is the Rafiki software that actually already operationalizes the Interledger Protocol. So please, Hannah, the floor is yours. Thank you very much for being with us.
Amazing. Thank you, Luca. And thank you so much for the invitation to join the panel and the opportunity to support this really important work. It's great to be here. And the question that you raised goes right to the heart of Interledger's role in the ecosystem. It's not about replacing national systems, it's about connecting them. But before I go into talking about the technology, I also want to start by saying that we can't separate conversations about money, systems and people. And it's really important that in these conversations that we are bringing in representing the community voices as part of the discussion. Because I think how we access and move money shapes the choices that are available to all of us. But it shapes how we see ourselves. So don't look poor, don't sound poor, always apologise first. And that was a key message that I was brought up with in a very working class family. So yes, financial systems do make managing finances easier. But at their best, they're safety nets. They're not saviours. They don't solve all the problems, but designed in the right way, they might not add to them. But at their worst, they not only exclude people, but they disproportionately extract from them. And today, although digital payments are embedded in daily life for many people, there's still 1.3 billion people in the world that remain unbanked. And against this backdrop, so payment infrastructure, like we've heard already from esteemed kind of panelists, UPI and Pix show what is possible and what is possible when you design with participation at scale and you're considering everybody in the ecosystem. And that really demonstrates that a truly global, financially connected ecosystem is possible. So just because it doesn't exist today doesn't mean that we won't see it in the future. So now is the time to start contributing to the conversations that moves us beyond just looking at domestic infrastructure and towards that cross-border interoperability. And the challenge in that is often not the technology itself. It's about how do we create the right policy and regulatory alignment needed to connect systems across borders, while also still allowing communities and institutions to retain control over their systems. And that goes beyond just talking about connected systems. It's about how do we actually work together to build the connected mindset for that to happen. And that's where Interledger does come in. So Interledger is an open technology stack. As you said, it is stewarded by the Interledger Foundation, a global non-profit foundation. And it is designed purely to connect financial networks while enabling them to retain sovereignty over the systems. A key layer within the technology stack is the Interledger Protocol that we often refer to as ILP. And that enables different financial networks to connect and transact through a shared open standard for payments. Much like TCP/IP created a common language for the internet, ILP provides the common protocol for transferring value across different ledgers, wallets, and payment systems, and that's regardless of currency or underlying infrastructure. It's designed as a currency agnostic protocol for sending packets of money across networks, and that's enabling a network of networks for value transfer. Rafiki, as you mentioned there, and this was really created, Rafiki, because we recognise while the technology stack holds great value, often the time to implement it can take longer than people's needs are in terms of the results that they're looking for. So Rafiki was taking the technology stack and turning it into an open source reference implementation that enabled institutions and account providers to build and manage those connections. And I want to talk a little bit about the kind of broader work with Interledger Foundation and the types of organisations that we've worked with in terms of the implementation of Interledger technology. So we've worked over the last 5 years since we've been around with grassroots and community-based organisations to fund prototypes and implementations of Interledger. And what we've learned through that process is that building with communities is really different to building for them. And a good example is when we think about financial literacy, which can often be misrepresented as people being financially illiterate. So I don't know how many people have been at conferences when we talk about financial inclusion, and an example that often comes up is people don't understand that they shouldn't keep cash under mattresses. In reality, that's not reflective of people's experiences. In communities that we're talking about, when we talk about financial inclusion, every financial decision carries consequences. It's about choosing between health and education, about food or shelter. And so managing money in those contexts becomes acts of extreme financial knowledge and care. So when you're working with communities, it's not about asking, it's primarily what we go in and the question that we ask is, what do you need? And it's not about sharing what you think people don't understand. Because I can speak from experience, what working class people are really good at is building support networks when systems fail them. And when I think about my own experience growing up in a coal mining village in the UK after the miners' strikes, where entire communities lost their jobs, industry was decimated. I remember my mum helping to set up credit unions in the local church. And what stayed with me most about that experience is that people could walk into a room and ask for money without feeling shame about why they needed it. And I think that's really important because systems are not always neutral, as mentioned earlier. When they're not governed properly, they can deepen exclusion and harm. And that's why digital public infrastructure matters so much, because systems need standards and they need to be accountable for the people that rely on them. We saw and experienced this firsthand last year filming a documentary called The People's Code in rural Mexico, and people shared stories about creating community banks in the shadow of systems that had excluded them from years. And at our annual summit, members of those community banks shared their experiences, deeply personal experiences, including one woman who spoke about in the past, children in a village were born as a result of rape committed by people who came to take their land. She described financial agency as a lifeline that helped women in the village reclaim control over their lives and their futures. And after seeing the documentary screened at the summit, another community member thanked the team for sharing the stories, but first she thanked Mother Nature. These same community members travelled 7 hours on public transport to attend this summit. They were leaving villages that were cut off by storms, without electricity and with limited access to water and food. These communities are not looking for sympathy. They need financial infrastructure that works both online and offline, because when systems fail in moments of crisis, like, the consequences are real and they're in real time. It's not abstract. This same financial infrastructure that also needs to enable remittances to flow directly into those communities through trusted local networks. And that gives the next generation the choice to stay with their families rather than feeling like they've got no choice but to leave. And so when we talk about resilience and we talk about resilience in communities, we need to remember that resilience is a survival response. It's not a quality people have chosen to develop. And if we want to understand why financial systems and cross-border payments should be more open, accessible and non-extractive, we have to begin with people's stories, why the money matters, what it funds or fails to fund, and who is the system taking from. So how we connect people, money and choices is ultimately shaping the world that we want to live in. And UPI and Pix have shown us what's possible. And so it's really important that we all contribute to these conversations in terms of what comes next.
Thank you so much, Anna, for helping us to understand how the Interledger Protocol works, and Rafiki, and also for sharing more about Interledger's values and ambitions as an organization. Looking forward to continuing the conversation later on. At this point, we're going to ask a question to all of the panelists. So the question is, could you please tell us about some of the most relevant challenges in the design and implementation of UPI, Pix, and Interledger Protocol, respectively, and how have you addressed these challenges? I would suggest that we kick off with Ajay and then move on to Amrita and then Breno, Larissa, and then Anna. So Ajay, I'll hand it over to you. Thank you.
Thank you, Anna. Possibly I'll start with challenge itself. Securely, resiliently. Are you able to hear?
Yeah, so we had a temporary glitch, but now we are back. Thank you. Go on.
Okay. I'll repeat it. One of the most important challenges in implementing UPI was building a payments infrastructure that could operate securely, resiliently, and interoperably at population scale. India's diversity across connectivity, banking access, and digital literacy required UPI to evolve not merely as a payment product, but as foundational digital public infrastructure. From the outset, UPI adopted an open and interoperable architecture, enabling banks, fintechs, and payment service providers to connect through standardized APIs under NPCI and Reserve Bank of India oversight. While this prevented ecosystem fragmentation and enabled innovation, open interoperability also required robust safeguards around authentication, access control, fraud monitoring, and security standards. The second most important challenge was scalability. The few payment systems globally have experienced the pace and magnitude of growth witnessed by UPI. As mentioned earlier, UPI processed over 241 billion transactions in financial year 2025-26, with transaction value exceeding USD 3.5 trillion. Such scale required continuous strengthening of infra capacity, network resilience, and transaction processing efficiency. Maintaining the high availability and operational resilience at this scale became equally critical, requiring continuous strengthening of cybersecurity frameworks, redundancy mechanisms, and real-time threat monitoring capabilities. Another important challenge, third one, was the merchant adoption, particularly among small businesses and informal sector merchants. UPI addressed this through interoperable QR infrastructure, low onboarding cost, and frictionless settlement mechanisms, enabling rapid adoption. However, this expansion also increased exposure to phishing, impersonation frauds, mule accounts, and social engineering risks, making consumer protection and fraud prevention critical priorities. NPCI addressed these challenges through investments in technology modernization, distributed architecture, redundancy framework, and real-time monitoring system. Response time optimization, enhanced processing capability, and stronger failover mechanism become essential as transaction volume increased exponentially, while ensuring that infrastructure upgrade did not disrupt customer experience. Now, coming to the fourth concern, is a digital adoption accelerated as it accelerated cybersecurity, fraud prevention, and sustaining public trust emerged as some of the most critical implementation challenges. A payment infra operating at national scale must sustain public trust through strong consumer protection mechanism. One of the defining strengths of UPI, or India's digital payment architecture, has been its emphasis on security by design. UPI was built with safeguards such as device binding, two-factor authentication, transaction limits, and real-time risk-based monitoring, enabling interoperability at scale while sustaining resilience and consumer confidence. NPCI and ecosystem participants have also increasingly adopted AI-driven transaction risk monitoring system to identify anomalous behavior and suspicious accounts in real time. We may mention here that NPCI is also piloting federated AI model to strengthen fraud detection and intelligence sharing across the ecosystem without compromising sensitive customer or institutional data. In this context, we may, however, possibly not ignore the significance of the cloud mythos. The significance lies not in a single model, but in the emergence of frontier AI system enhancing offensive cyber capabilities. These systems cannot and can autonomously detect deep-rooted vulnerability, chain the exploits, and operate adaptably at machine speed, often beyond traditional defense mechanisms. In interconnected DPI ecosystem, risk extend system-wide, impacting financial system, energy, automotive, and aviation sectors. Given the deep integration of finance with telecom, cloud, and public infra, resilience must be ecosystem-focused. NPCI is actively monitoring such development through its cyber resilience initiative, while global regulators increasingly stress coordinated defenses, intelligence sharing, and AI-driven cybersecurity strategies. Now, looking at cybersecurity and digital sovereignty, globally, resilient payment infra is increasingly viewed as part of the national economic security, making cybersecurity central to digital sovereignty. Going forward, behavioral analytics and adaptive cybersecurity system will become increasingly important. However, tech alone is insufficient. Governance, accountability, regulatory coordination, and continuous supervision will remain equally critical. India's experience demonstrates that openness, interoperability, and security can coexist through strong institutional frameworks and collaborative governance. The long-term success of DPI depends not only on innovation and scale, but on preserving trust. Cybersecurity, therefore, remains foundation to building resilient, inclusive, and trusted digital finance. Now, coming back to one of the comment, actually, I like to, Luca, actually, it's interesting to hear from her, very interesting thing on this bridge and interoperability, actually cross-border. Possibly, I'd also like to remind all of you before I leave that tech is most important capabilities because we have to develop this bridge or interoperability between different payment systems. But also we have to be mindful about creating some sort of a synergy between the legal and regulatory requirements of different jurisdictions. So that will be another thing which we need to be very conscious of. So Luca and Hannah, I thank both of you and the university actually for inviting me. Rajesh will continue, but if you may permit me, I'd like to leave. Thank you.
Thank you so much for joining us today and for all of your comments and insights. Really appreciate it.
Thank you. Thank you.
Amrita, we'll pass the floor to you if you want to continue with answering the question.
Thank you so much. And I know we're short on time, so I'm not going to take all of the 5 minutes that I had, but I'll quickly comment on one of the threads that came up from Mr. Chairman's comments around fraud and some things that have been done. So we had done a work last year where we had a quantitative survey of nearly 4,000 participants across 9 states in India. We did 18 key informant interviews. We did 7 focus groups, discussions with the elderly, women, persons with disabilities, really trying to understand this landscape of frauds. And what we found was that there were significant overlaps between experience and awareness of frauds and the use of UPI as a medium, either through direct transfer by the victim or through other mediums. And over half the respondents mentioned they lost money through UPI transactions, compared to which only half as many people lost money directly through their bank accounts. So, of course, the one thing has been that, the focus of UPI has been to make it easy for a large number of actors across different sort of digital, financial, spaces, demographics, to be able to use the platform. But what that has also done is that it has made frauds, very common and potentially easier. And that's something that I wanted to point out. And again, I think going back to one of the comments that Anna was making about, the financial experience in India, we've often talked about frauds and the scale of it, right? Like people lose X amount of money, not just through UPI, but broadly within the digital financial ecosystem. But what our study revealed was actually that in several states, the median financial loss that was reported was almost 50% of the median financial income that people reported in that particular state, which means that even if I lost, let's say 5,000 rupees, that is a significant contribution to my monthly expense or my monthly income. So therefore, the question of just scale in terms of frauds is not the only relevant signifier of the magnitude of the problem. People may have experiences which may be smaller, but if your financial ability is low, then even a small amount of money lost is a problem. And then with redressal, I think Mr. Chairman did point to certain redressal mechanisms, but some of what we heard was also that there's a lot of shame that is experienced by consumers when a lot of the fraud that actually happened was victims actually transferring money to the scamster's account, and therefore a lot of experience of shame and not being able to share that either with law enforcement or with necessary redress mechanisms and available lines. So I'll just leave it at that because I know we're short on time, and happy to go on to.
Thank you so much. Really important points that you raised, and looking forward to discussing them in the debate section of the webinar. Moving on, Breno, did you want to pick up the conversation?
Oh, yes. We face some similar challenges here in Brazil regarding frauds and cyber attacks. I believe it's one of the main challenges of every fast payment system around the world faces. Here we had like 12 frauds per 100,000 transactions on middle of 2024. It's not a high relative number, but that represents more than 400,000 frauds per month. So it's like 400,000 Brazilians losing money through Pix transactions, mainly because of scams, authorized push payments frauds, where the individual authorizes the payment with a password or a biometrics. And it's pretty hard to identify these kinds for the banks, for the payment service providers to identify APP frauds. But we had to deal with that. We had to improve the mechanism, so we did that. We set more rules, more obligations for participants in order to introduce and improve their security mechanism systems and engines in order to identify better a transaction that could be potentially a fraud. We improved as well our supervision among the implementation of the security mechanisms and penalization, applying fines to institutions that do not implement all the security mechanisms that we mandate them to. So this set of procedures, rules, supervision, and penalties, we managed to reduce the number of frauds on Pix. Nowadays, we face around 5 frauds per 100,000 transactions, but we have to rely on keep the population confident on Pix. So it's something that we really care about. We have a permanent agenda with the private agents. We have a specific strategic group that works upon Pix Forum, where we have lots of discussions in order to improve the security mechanisms that we have here in Pix. Another challenge that it's a little bit different that are the cybersecurity. We started to face some cyber attacks on some participants' infrastructures, not on the Central Bank of Brazil infrastructure. And once again, we had to create new rules in order to make them improve their security mechanisms. We created also a new tool in order to monitor how they manage their accounts that they hold here at the Central Bank of Brazil that provide liquidity to Pix transactions. We saw some behaviors that were not acceptable. And then we set new rules, new tools for monitoring, allowing them to block money more instantly, and setting limits to transactions on their own accounts. But we're still facing some problems, and we are struggling to solve this kind of problem. Just to finalize, one thing that Ajay didn't mention for India, that we have a really big challenge here. It comes from the DPI. Pix is a digital public infrastructure. As a public infrastructure, we rely on public budget in order to build our system, to maintain our systems, to improve our system, and mailing to hire staff, because Pix is made of system, is made of people, mainly people. And we have lots and lots of constraints here at the Central Bank of Brazil in order to hire staff to make Pix work. We face like 10 years of not hired one single person here at the Central Bank of Brazil from 2015 to 2025. So how we launched an infrastructure such as Pix with no new staff. So we had to internally get people from other areas that were not experts on payment systems to work on Pix. So it was really challenging, and we still face challenges on this. DPIs are really amazing. Lucas' introduction was perfect, lots of benefits, but they rely on public budget. And if the government, that's the responsible for the budget, don't buy the idea of providing DPIs to the population, we will face problems on offering, on supplying, and on maintaining the infrastructure that we know that brings lots and lots of benefits to the population.
Thank you so much for sharing those considerations on fraud, cybersecurity, and public budgets, and some of the ways that you've been responding. Larissa, I will pass the floor to you.
Thank you, Sana. So to avoid some overlap with the situation that Lobo explained to us, I tried to summarize in three aspects. First of all, in terms of governance capacity, as he highlighted, we still remain the problems, normal problems in terms of public institutions. Once the central bank there is some kind of autonomy, but it's still under the central government of Brazil. So you should analyze more how you can handle on it. I agree with him. This is a problem, and maybe one impact, might be impact in terms of the cybersecurity, because when you're looking for the coordination, institutional coordination, a second round of the problem, we still lack in terms of computer security incident response officer, for example, because as much as you have two specific departments in the level of the central bank that deal with the cybersecurity issues, regulating the financial institutions once they are the first level, but they must reply and respond in terms of authority of the central bank. So this is also a problem in terms of the institutional coordination between the departments and the lack of the budget increase their management. And then going back in terms of the cybersecurity architecture, and maybe my comment to avoid some mistake is because since the last December, as Lobo highlighted, the central bank have been introduced more protocols and resolutions, such as now they asking the institutional financial institutions to provide some stressing tests in terms of their capacity for deal with the entire hill of the Pix. And then this is a kind of information that is important. But for the users and for someone out of the central banks or the Pix environment, we still lack in terms of transparency how those new levels of protocols are working. Because, for instance, in Brazil, you also can claim some kind of digital service problems in our consumidor.com. It's a kind of website. It's a voluntary from the government, but there's a kind of recommendation also the banks you be there in terms of create this channel with the users. So different mechanisms, no clear coordination between them. We have reinforced this, and this is kind of also opportunity to looking for what to have in the table and build more strong system and also build the trust in terms of the users. So thank you so much, Hannah.
Sorry, I forgot I was on mute. Thank you so much, Larissa. And I will hand it over to Anna to wrap up this part of the webinar.
Yeah, thank you so much, Hannah. So I think what's interesting in terms of adoption and challenges with Interledger, intentionally, since we were established as a foundation, we've worked with community-based organisations, as I mentioned, and that was the right thing to do. But it comes with challenges for those organisations, because when you come to those kind of policy and regulatory challenges, when it comes even to kind of driving adoption, the revenue and the budgets that larger organisations have to support the actual rollout of the products it far exceed often what smaller organisations have access to. So, and I think that it can take time, and that can, often mean that you have to, you're working with people for a lot longer. But we are starting to see that adoption is growing, and also what I would say is that scale doesn't necessarily represent impact. So some of the projects that are starting to work actually have a significant impact on people's lives. And one of the kind of example that I used earlier about Mexico is the People's Clearinghouse in Mexico is building the financial infrastructure that connects community banks, and longer term will be enabling remittance flows to go directly into community banks. So that impact is transformative for people in those communities. But we're also seeing projects kind of in different parts of the world. We've got projects in Africa looking at supporting community saving institutions. So it's happening. But I think what's interesting now is what we're seeing is the environment is much more conducive to those larger conversations, and where we can now look to people that are with larger infrastructure providers, kind of seeing where Interledger may have a role to play in those conversations and aspirations. And one thing I would say is that often when projects don't work as intended, it doesn't mean that they're not meaningful. And open technology, and I think probably I speak for most people who work in open technology solutions and organisations here, it comes with an open learning mindset as well. So actually people sharing those barriers, sharing what they did to overcome them, and actually helping the next people and the next organisations build is about what gives us that global community and starts to build that connected mindset that we need to create a global financial ecosystem.
All right, fantastic. Thank you very much for these further elements. And I also want to clarify for the audience that we are using also this webinar as a further feedback for our research. There are a lot of very interesting elements that are emerging, especially thanks to the presentation of Chairman Ajay, Breno, and Anna, that we will consolidate in our research. It will be published in its early findings next month. So just to start finalizing this webinar, there are a couple of questions that have emerged from our audience. So there are three in particular that I wanted to share so that all the participants can pick up one or even more of them and provide their final remarks in the next 5 to 10 minutes. So one, I think is particularly directed to Amrita, but I would say to the Indian friends here. So how can we get more information regarding a potential market concentration and incentive that infrastructures like UPI may determine? The other one is, I think, more directed to Breno and the Brazilian friends. So how can you provide some further updates about the Brazilian, actually this is for both Brazilian and Indian central bank digital currencies? Are they already in use? And the last one, this one is more directly to Breno, so about the lack of people to implement Pix. What can be done to improve the number of people dedicated to this kind of efforts? So these three questions, feel free to chip in on any of them. Maybe we can start again with the previous order so that everyone has the possibility to reply. Perhaps Rajesh, do you want to chip in and to provide to reply to one of those questions on where to find information about market incentive and challenges of UPI, and also about the use of and experimentation of the digital rupee?
Yeah, thanks, Luca. So, I will start with the CBDC. So, Reserve Bank of India, launch the retail CBDC. Thereafter, we launch the wholesale CBDC. So, retail CBDC, CBDC project is under the pilot, and on the retail side, about 19 financial institutions and about 3 or 4 fintechs, participated in the CBDC pilot. About 1.1 crore CBDC wallets have been in the market, and it is, and UPI QR, which is approximately about 65 million merchants. The CBDC wallet users can access to the interoperable UPI QRs for the day-to-day merchant payments. And the P2P functionality is already enabled from the day zero. So currently, from the central bank of standpoint, it is under the pilot stage. So this is what currently on the CBDC. On the market concentration, I think the chairman sir has already given his perspective that 2 players, and Amrita also touched upon the concentration part, that 2 players commands about 80 plus percent market share. Though the market is open, and if I share the statistics, when about 3 or 4 years back, about 2022, about 23 or 24 fintech players were participated in the UPI and providing services to the customers as a part of the third party application provider framework. And now we have about 45 fintech firms who are offering the similar services. And the what we have seen in the last couple of years, that the new players, they are investing, and we believe that the competition will naturally correct the concentration in the coming years. And from NPCI side also, the chairman also touched upon the BMAP, which is now gaining a significant traction. And obviously, BEAM was earlier a prototype app which was launched by Honorable Prime Minister of India in 2016. And now it is a separate subsidiary, and focusing on capturing the 5 to 6% market share in the coming years. So this is what I can update on the market concentration. Thank you.
Fantastic. Thank you very much, Rajesh, for this very detailed overview. And then I would ask the remaining panelists to try to be concise and to provide their replies in, let's say, 1 or maximum 2 minutes. Thank you very much.
Yeah, I'll just pass it on. I think Rajesh has covered both the questions on India, so I'll just pass it on to the Brazilian colleagues.
Excellent.
So regarding the lack of staff, we have a structural problem here at the Central Bank of Brazil, because we are not an independent institution. We don't have our own budget. We are not financial and budget independent. So we have a project on our parliament in order to concede this autonomy and independence to the Central Bank of Brazil. So we would have the capacity to hire staff and get all the resources that we need, financial and human resources, in order to develop all of our projects, including Pix. So I believe that we have to solve this problem through a new law that is already being discussed on the parliament. Regarding the CBDC, we have our project here that's called DREX. We had 2 stages of a pilot that we finalized on 2025. We had some problems with this pilot. regarding scalability, regarding privacy. So we had to adjust our strategy. Drex was never meant to be a retail CBDC, but a wholesale CBDC. And nowadays we're trying to look at more tangible use case regarding delivery versus payment, credit, and we are also testing other technology besides the blockchain technology that we already tested. We are testing a more centralized technology to see if we can move on, but it's still a strategic project here on the Central Bank of Brazil, but we don't have any project of when we are going to and if we're going to launch it. But we think that's becoming more a kind of a financial market infrastructure for smart contracts, tokenized assets, and to improve the settlement of these tokenized assets more than being exactly a CBDC.
Fantastic. Thank you very much, Brandon, for these very relevant clarifications and also updates, very relevant and novel regarding the Drex. Thank you very much, and look forward to continuing the discussion on these specific points, especially. Larissa, please go ahead.
Yes. Thanks, Luca. I will briefly just say that Brazilian government have already prepared the floor to create the system very well. Mention that you have a law in Brazil that put in the hands of the central bank the power just to create digital currency as a Brazilian reais. So it's clear separated the powers to crypto actives and the Drex as an asset, which is quite important for the government. Just to mention this in terms of the regulation. Thanks.
Very good. And now the final words to Anna.
Thank you. Well, yeah, nothing to add to the kind of the comments that have been made, other than to say it's a very interesting time to be working in this space, and look forward to the kind of the research findings and drawing together across these two key areas, and then looking broadly out in terms of what this means for the next wave of infrastructure that will be built. So thank you for sharing thoughts, and look forward to what comes next.
All right. So right on time, I would like to thank very much all the participants. Really, you made this webinar exceptionally interesting and exceptionally valuable, including, as I was mentioning before, to enrich and to review as an exercise of peer review of our research that will be published soon. And so we will keep on posting about our new developments. We plan also to discuss and present our finding in a dedicated session at CPDP Latam that will be here in Rio in August, 12 and 13 of August. And then also to discuss this at the BRICS Plus Digital Competition Forum, which is a highly strategic event also that we host here every year at FGV at the end of November. So let me thank you again for your time, for your excellent inputs, for your friendship. Hannah, do you want to say something else to wrap up, or?
No, just thank you so much for this discussion, to the panelists, the participants, everyone who asked questions. As Luca mentioned earlier, all of this feedback gets funneled into our research. Please stay tuned and follow the project. And just wanted to thank our funder, Interledger, once again for making this project possible. And I just wanted to extend our thanks to Beatrice and Vanessa and the FGV staff for helping make this webinar happen. So thanks, everyone.
Thank you very much. Bye-bye.
Thank you.